Good morning from the Asia Pacific, half an hour away from the opening bell. Hong Kong, Shanghai, and Shenzhen. You're watching the China Show. I'm David Ingles with Yvonne.
Our top stories this morning: the dollar's strength intensifying pressure on Asian currencies. The yen's tumble to 1986 lows, raising chances of another intervention, while the renminbi hits its lowest since November.
Also ahead, we're looking at tech and these worries weighing on Asian stocks here in U.S. futures after Micron's outlook disappoints investors.
Beijing cuts down payment and mortgage requirements, becoming the last Chinese megacity to ease home buying rules.
Plus, we have a Bloomberg scoop. China's financial elite facing pay caps and also clawbacks and bonuses under President Xi Jinping's Common Prosperity Campaign.
Yep, it is really that FX story that's dominating the narrative here today. You take a look at the yen, of course, as we mentioned, tumbling to that 1986 low. And you're basically seeing that roll, not just, the FX side of things, G10 and EMFX, but really even in the treasury market, given that there is now the speculation that maybe they're going to have to sell some treasuries here in order to defend their currency, right? So that certainly led to a little bit of a sell-off across not just the U.S. side of things, but you're seeing it globally now, where this bond sell-off is extending further for another day. Aussie 10-year yield, look at that. We're up another close to 11 basis points here right now. This is after, of course, that stronger Aussie CPI yesterday. You pair that with Canada's CPI that was also hot. Didn't really help with that trade overall. So that's why you're seeing even JGBs are up some 4 basis points here this morning. And you're watching very closely the Bloomberg Dollar Index. Basically, we are now at those year-to-date highs for King Dollar once again. So that's why you're seeing stocks on the back foot here. We're down about 0.6%. U.S. futures are also seeing lower by 0.4%. It is all about those yen crosses, though, as we mentioned, not just with dollar yen, but also euro yen hitting a record high. You watch some of these other sort of pairs like renminbi against the yen as well, and that's where you start to see that record highs there as well. So certainly that yen weakness is basically filtered through broad-based weakness overall across the FX universe here right now. Can we show those yen crosses, please, as you start to look at everything from Aussie yen, euro yen, as well as the pound yen here this morning, and you continue to see at least a little bit of stabilization, but we're still hovering around these lows here right now. You take a look at how EMFX is doing. Certainly we're watching very closely the likes of renminbi. So as soon as we saw 160 handle on dollar yen, we saw 730 for dollar China, right? So we're hovering around that 729 handle here right now, but that brings us back to the lowest that we've seen since November for that currency. And a trickle-down effect, you're seeing that in the yuan, you're seeing that in Taiwan dollar just coming online here as well. PHP, the peso, we have a BSP decision a little bit later on, set to hold though, but we're going to look for any sort of clues on the weakness that we're seeing in the currency of late. We're getting close to that 59 handle for dollar peso, and I believe the Bloomberg Asia Dollar Index is at the lows that we've seen since November here right now. The China setup, of course, obviously we have to deal with the weakness in the currency, but also this bond sell-off that continues to be, I should say bond rally, that continues to be relentless, right? You take a look at the 10-year after reaching those 2-decade lows on those 10-year yields. We're just about 2 basis points away from the 30-year reaching that milestone too, Dave.
Yeah, this unrelenting rally on the long end of the curve, and certainly that goes really into the other conversation, right, that you've outlined quite nicely there, Yvonne, this currency malaise that we're seeing. So, a couple of other things, right? So when you look at going into today, yen, yuan, that's one cross you're watching very closely. We're obviously watching the fix. So we went this week from just under 712 to 712.01, I believe. 712.25 on Tuesday and 712.48. I'm not giving you time, so I'm giving you the midpoints of the day going into the Thursday session. Right. We're also looking at, so interesting price move into the close yesterday onshore where, you had a rally into the close, CSI 300, your main benchmarks there. You are getting a lot of inflows into these large cap ETFs, which I guess in some ways perhaps potentially reflects, but not necessarily so, state funds coming in and stabilizing the markets. More on technicals in a moment. There are developers, of course, after Beijing became the last major Chinese city to ease housing curbs as well. We talked about the CGB rally, and as far as data goes, industrial profits numbers are due out at about the open today. I should also mention, when you look at the PBOC and the fixing there, the currency has been knocking on the door of the upper end of the trading band for several days in a row now. So we'll see what happens mechanically when the fixing comes out.
Yep, joining us now is Trang, Thuy, the macro and FX strategist at Macquarie Group. She joins us now. Perfect time to really have you on the show, Trang.
Good to have me on as well.
It's interesting, right? When you see a 160 handle for dollar yen, you see a 730 for dollar China. Which one matters most in your universe right now?
Well, I cover EMFX, so RMB would matter more for me. But I guess from the market perspective, we are also very nervous around, yen intervention. Basically, you lack FX volatility for this year so far. But then now you have a bout of volatility going via the yuan, going via the yen, and a bit of a depreciation risk there as well. So FX is getting more interesting at this point.
Who do you think is, among the currencies that you cover, who do you think is intervening in these markets already?
We certainly have the PBOC doing various,
various methods, of course.
Yeah, exactly. Doesn't seem to be selling dollar directly from FX reserves, but various other ways, including swaps, including via, CNH funding. Across EM Asia, for example, I think BOK is suiting BSP possible.
Right.
And other central banks, for example, they're looking at other methods, right? For example, we get Bank Indonesia. They intervene, throughout, but obviously they did a rate hike in April, and they potentially will need to look at rate hike again. And for example, in Malaysia, we have central bank looking at other administrative measures in order to defend local currencies.
For the renminbi, though, I mean, we've been knocking on that trading band on the weak side of things. I mean, what else do you think policymakers can do to manage the currency here right now? Because it seems like when it's yen, they're all kind of set. They're held hostage to the Fed right now still.
Yeah. Well, I think we take a step back and look at what the PBOC have been doing. And I think it's clear that at the moment they want to guide dollar RMB higher. So they want to allow a bit of depreciation.
Seen it the fix for 6
exactly.
sessions, right?
So, I mean, spot has been, as you said, knocking on the upper band there, but it would not have done so if the PBOC didn't raise the fix up in the first place, right? So there's a policy intention there to weaken the yen. And if we take a step back and look at March 22nd, I think that was the day that the PBOC lifted their onshore dollar selling level from 720. That should be taken as a pivot point. That policy was shifting the regime from capping RMB to now allowing for depreciation. And on your point on what they can do, obviously they can continue what they do right now, which is taking the fix higher by 20 to 30 bips each day. But I think the problem with this strategy is that it encourages one-way depreciation expectation. And as you said, every day spot will test upper band and they would have to do more intervention. To me, I think a risk that's still underappreciated is a possible band widening. And if they do so, they achieve two objectives. Number one is that they get RMB to a weaker level faster with the band widening. And then they could flatten the fix again and say, I'm done for now. But the second more important objective, in my view, is that they send a very strong signal to the market. Be prepared for more FX volatility and depreciation risk going into the U.S. election.
So how does one position for a possibility of a widening in the trading band? Because that's something that could happen later. It could happen in 30 years, for example, right? So So how do we manage that from a strategy perspective?
I mean, from a strategy perspective, we have been saying that dips in dollar CNH are buying opportunities. We have been saying it from April already, and I think the market is trading that way. What we can also see is that the CNY CNH spot spread is widening. To some extent, that may say that there's stress in the market, and that's how the spread has gone up. But to some extent, it may be saying that some of the market are listening and maybe pricing for that band widening risk as well.
Just given the tariff risks around this U.S. election, who's going to be president, do you think that's a factor in why the PBOC is maybe allowing that fix to weaken a little bit? I mean,
I definitely think so.
How does the back half of the year look like for dollar China then?
Yes, that's really the key questions. I think fourth quarter, our view is that dollar CNH go to 7.35 in the third quarter. We're on that path. It seems to be able to get there. For the fourth quarter, I think it's highly uncertain, and it would depend on, U.S. tariffs and the extent of the tariff and whether it's broad-based, how high it is. But if you look at the PBOC or the China authority reaction during the trade war, when you are facing external threat like trade tariff, they were willing to allow RMB to depreciate to offset the impact of the tariff and cushion the economy. And historically, a 5% move or 5% rally in dollar RMB is something that I think within policy tolerance. And consider where we are today, that 5% will take us, well into the 760, 770. And that is why, the PBOC need to prepare for that market, for that volatility.
Yeah, and on the fundamental, on the rate story, I noticed that you were looking at Yvonne when she was talking about the CGB rally, 2-decade lows on the 10-year, for example. Can we assume that rates in China will fall? Or at least, remain steady or fall for the foreseeable future? And is the yuan now primarily a funding currency in your view?
I think over the long term, I think people will continue to take the RMB as a funding currency.
Okay.
In terms of the rates outlook, we do have, our economists do expect the PBOC to continue to cut rates over the coming quarter. So when you get that rate cuts, it's possible that you get further downward pressures on China bond yields. And additionally, I think one additional incentive for the PBOC to allow a bit of RMB weakness is to create that policy room to cut rates over the coming quarters.
Okay, give us more of the FX implications for EMFX in Asia then. Obviously, North Asia, you have some of these tech cycle inflows, and really that's helping to buffer maybe some of these currencies, but that's really leaving ASEAN behind in some ways. How are you looking at ASEAN now?
Yeah, so I think Q3 is still a very vulnerable period. I have been bearish on ASEAN FX in Q2, but I think that's extending into Q3. And the reason for that backdrop is really the RMB, causing concerns here, how high dollar RMB would trade. And if, as you rightly point out, the trade and the tech cycle is helping Korea and Taiwan, but it has not filtered through to the product cycle in ASEAN yet. And we think that would be a theme of 2025. So right now, we still left being very vulnerable to the RMB and to the Fed's parts.
Okay, sorry, very quickly. Do we test highs for the year or lows for the year for ASEAN? Which currencies will be testing lows of the year?
I think IDR is a risk to watch because it's potentially vulnerable, and also because of the fiscal uncertainty. That means that foreign investors are likely to pull back in the short term.
Okay. Cool. It's fantastic. Well, quite perfect timing, in fact, there for Trang to join us, right? Trang Thuy, macro and FX strategist there at Macquarie Group. Just under 2 minutes away from the fix of the day. Just ahead here on shows here, more commentary on the way, analysis, and we're broadening out beyond the FX space with StashAway. Stephanie Leung joins us at the bottom of this hour, and we're looking at commodities in the next hour of the China show. Matty, Zhao out of BofA joins us as well, coming through there. Cutting down to the open of trade. Just over 15 minutes away, 17 minutes to be exact. Shanghai, Shenzhen, and here in Hong Kong. This is the China Show. Thanks for joining us. Good morning. Weaker every day so far can be your headline here as far as the renminbi fixing goes. So we're getting the midpoint for the day out, and certainly this one quite material given the weakness we're seeing just about across the board against the U.S. dollar. 712.70 is the midpoint of the day. We're coming off a fix of 712.48 in yesterday and 712 and 712.25 the day before that. So pushing higher.
The fact that you've seen a series of these weaker fixes from the PBOC, which is what Trang was saying from Macquarie, that there's a signal and intention here from the PBOC to allow the renminbi to weaken ahead of all this U.S. election risk as well. So it is the tariff risks that are playing a big factor into all this as well. Another story we're tracking, of course, is this property market, and the latest news that we got yesterday about Beijing has now eased home buying requirements for down payments and mortgages, joining the country's other megacities in supporting the real estate sector. Our China correspondent Min Min Lo joins us now with more. So they're the last megacity to do this. How significant is it?
Yeah, so Beijing has now lowered the down payment ratio to 20% for first-time home buyers and 35% for second-time home buyers in urban areas. And they're also creating incentives for families with 2 kids who can now enjoy the same down payment ratios when they buy a second home as when they buy a first home. And like you said, it's the last of the first-tier cities to ease home buying curbs. And it's important because Beijing really tops the list of 30 cities when it comes to oversupply. Take a look at the chart that we've prepared. Beijing tops that list there. Its unsold homes will take nearly 49 months to offload. And what's the effect of this with the new measures? It could boost home sales recovery for maybe the next 1-2 months. But the question is how big of a boost and how long of a boost? If you take a look at Shanghai as an example, its home sales in the first 23 days of June was up 8% month on month. That's after it eased home buying curbs. So it's significant, but maybe not significant enough given that home sales has fallen over 20% in the first 5 months of this year, despite all these cities really rolling back those home buying curbs one by one.
Yeah, so what's the outlook then for the sector rest of the year? So this is just the latest of what's really been a series of just about across the country up until this point.
Yeah, I mean, the Beijing measures is not likely to move the needle a lot, and the government has rolled out that 300 billion yuan plan to get state-owned enterprises to buy back unsold homes. It's expected to generate 500 billion yuan in credit, and that's expected to absorb only 1% of unsold homes. And Bloomberg Economics have estimated that it will take 4 years or more to really offload those 60 million unsold homes, which is at a record high right now. And then there is the leakage to the secondary home market, which is really limiting the rebound of the new home sales. And also, home prices has slid for 11 straight months now. That's really caused many people to lose the conviction that homes are still the place for you to put your money in. And you have to look at the economy overall. You know, it works in tandem with employment outlook, income outlook. Like all of that has to improve before people would feel confident to really buy houses again.
Min Min, thank you so much. Min Min Lo, we're tracking, of course, how any potential reaction in property counters will get an initial indication in about a minute from now. Let's have a look at chip makers as well here. So we are continuing to see some pressure coming through here following the Micron story and that slump in late trade in New York. In fact, NASDAQ futures are now down 0.5%, over 108 points. Now, Micron effectively forecast disappointing investors here who had already fairly lofty expectations around revenues. Let's get more from our tech reporter, Belle, here on set with us. I mean, Micron shares look similar on a graph to NVIDIA, if you take it that way. So expectations have been high.
Yeah, that's right. Really lofty expectations from Wall Street going into these numbers. You think about the moves, as you say, similar to NVIDIA, it means there's been a really sharp move higher this year. So you're up around 60% at this point. And so going into these numbers, investors wanted to see proof of future earnings growth, which it did kind of come in, really. I mean, you take a look at what Wall Street was expecting. It was around $7.6 billion for the fourth quarter in sales. That is an 80% jump on where we were 12 months ago. So it was very high. They came in with a range of 7.4 to 7.8. Now, some analysts, of course, on Wall Street, they were expecting even further than 7.6. They had north of $8 billion instead. And that's where you see perhaps that move there in after hours, that drop of around 8%, a little bit in line, again, what we had seen in options pricing as well, because they were guiding a move of much as 12% in either direction. So that was the move in Micron. And of course, you are seeing that reflected today with those chip makers, particularly where Micron competes in that HBM space, high bandwidth memory, and that's really SK Hynix and Samsung as well. Are those ones actually trading ex-dividends, so you could see extra selling pressure coming through. But that was the move there. Amazon was the other big mover intraday on Wall Street because we actually saw it entering the $2 trillion club. So a bit of a move there, very elite, of course. You've only got the likes of Alphabet that came in late April, and then, of course, NVIDIA, Microsoft and Apple, but then you're really in that $3 trillion club instead.
It was interesting what they announced, too, about this sort of discount section. And it seems like it's ways to really counter what we're seeing from these, you know, the Temus, the Sheins of the world.
Yeah, well, and again, you've really got to think about the business model and what has made Temu and Shein so successful is their approach where they're direct to consumer. So in a lot of cases, you would have businesses that sort of act as intermediaries. I buy from the factory in China, I set up my site on Amazon, and I sell with a slight premium on it, and that's how you make money out of it. Temu and Shein came in with this new approach, and so they were connecting factories directly to consumers. They were cutting out that middleman, and they were offering cheaper prices. And off the back of that, they gained so much market share. Now Amazon is coming in and they're saying, okay, we're going to follow that approach. We're going to trial that. They're starting it perhaps as soon as next week. It's still going to be on the Amazon website, a part of it. It's open to invited sellers only, but certainly something to track, and a new direction that Amazon is going in after we saw them actually cutting prices or fees for merchants selling clothes priced below $20 earlier this year. They're clearly aware of the threat that Shein and Temu are posing.
Yeah, and we saw those PDD shares, ADRs did fall overnight as well. Annabelle, thank you. Annabelle Jewelers there with the latest on all things tech here this morning. We are tracking, of course, that pre-market in Hong Kong here right now. Looks
down.
Like we are down. And sorry, I didn't know I was going to be on camera.
Yvonne rubbernecking.
I have to look above the camera to see where it goes. Sorry.
You can look at your Bloomberg terminal, too, which is right below your... Yeah.
There you go. 10 to 1% lower. That wasn't really flattering. Okay, futures are lower. We're still watching. It's still the bond story. It's still the FX story. 729 levels. But yes, there was another slightly weaker fix here today. Plenty more ahead. This is Bloomberg.
Welcome back. You're watching the China Show. 5 minutes of the opening bell. Initial indications are we will get a weaker open, which is really consistent with just this broad weakness we're seeing across Asian equities and risk appetite in general. And if you think this is bad, look at the bond markets. But we can talk about that later. A recap of yesterday, right? So Tuesday, Wednesday, and this rally into the close on the CSI 300. Not a lot of volume, though. Not a lot of turnover coming through. Up until this point, we were down about 5 straight days, which begs now the question, when you look at this sort of move in price and you look at the inflows coming through, we're going to get you a chart that shows it, inflows coming through into these large cap ETFs that track the market, which was indicative when you look at this, say, earlier this year, when state funds had to come in and stabilize the market. This was really one of the symptoms that we were tracking. Now, not to say, of course, that isn't necessarily what happened now, but the spike that we had this week in those inflows does beg the question, are we getting some inflows to stabilize these markets as the index, Yvonne, of course, hits what's eight-week lows, I believe, in some. We're back to Feb lows in the Shanghai Composite.
Yeah, and as you mentioned, I think we're close to really erasing all the year-to-date gains that we've seen on some of these Chinese markets as well. In terms of analyst actions, to tell you about Heidi Lowry, a new buy at EA Shanghai Securities here. This is just days after, of course, they replaced the chief executive. Zijing Mining as well. A shares rated a new buy at Suzhou Securities, and we have JD Logistics from Macquarie raising that stock to outperform with a price target just under $10.
Yep, flip the boards, please. Developers in focus as you have, of course, Beijing coming in and become the last mega metropolis to ease housing rules. We're seeing some to the upside. Lithium stock, we'll show you that. We'll talk about this on the other side of this break. We're going into the opening bell, over 3 minutes away. Futures are pointing down. The Thursday session is just ahead. This is the China Show.
Welcome back. You're watching the China Show. We are counting down the open markets here right now, and it really is what we're seeing is weakness across the board when it comes to risk assets here today. It's really been dominated with what we're seeing perhaps in the FX markets and as well as these bond markets. So this bond market sell-off, we're continuing for another day here in the APAC region. Dollar continues to be stronger against most EMFX here this morning, although we have, I guess, kind of come off of the cusp there of really 730 for dollar China, but dollar yen, we're still at 160 levels this morning, Dave.
Yeah, first time that we've hovered more than a few minutes since 1986. We were briefly above that when they intervened, of course, in late April, and then took us back to the current levels. But yes, I mean, weakness across the board, risk assets, Asian FX, the Bloomberg Asian dollar index is now at the lowest level, I believe, since the year so far. You look at the basket, for example, and that's a separate story. But again, a weaker fix for a fourth day this week. So far, you have to go all the way back to last week as well. The open in China, and again, we're focused in on what's been happening in the CGB space. And again, as you can see, that's green. So you're getting us a bid coming through still in the CGB market. A couple of other things here as well. Iron ore seeing a little bit of a bounce of late, although when you track that, we've seen that and things like copper, for example, have continued to come down as well. 0.4%, we're back to 29.61, which was the level we were trading at about 48 hours back on the Shanghai Composite. So 29.42 would be the level to watch there, because that would be the intraday low of, I think, Feb 28. Below that, you have to go all the way back to the start of Feb. Flip the boards. Hong Kong Open. And as you look at that, digest, of course, some of the industrial profits numbers, which Yvonne will get to in just a moment here. Down 1% out of the gates here as well, down across your heavily weighted stocks. There's this pullback, of course, across the chip space. In Asia, on the back of disappointing guidance coming out of Micron, which actually, that's not just a Micron story, right? That perhaps has some wider implications there. Right, we're looking at property. So Beijing became the latest city to come out, or last major city, in fact, because everyone else has done it as well, to ease and relax home purchase restrictions. CSI 300 real estate index, Bloomberg property index, different ways of looking at the same group of stocks here. Net ease is flat after the big pop yesterday and overnight on the back of these gaming approvals in China. And of course, we're looking at some of these duty-free related stocks listed here in Hong Kong on the back of China. Looking at this report that China's widening the allowance here for visitors to Hong Kong. We'll see if that has any implications. Not so far just yet. Okay, very quickly, the Hang Seng Index and the Hang Seng Enterprises Index, we've dropped and we've stayed at 50-day moving average. So we'll look at that as your potential support level very short term. We've been hugging that level for the most part of the last 2 weeks or so. So at about these levels, we then typically see a bounce. We'll see if that happens today as well. We were weaker, 140 points on the Hang Seng Index.
Yep, you're taking a look at that industrial profits number. We're still digesting it, and it's a pretty weak one here. So year-to-date numbers came out 3.4%. Prior was about north of a 4% handle, so it is quite a bit of a weakening there. In terms of the on-month numbers, year-on-year, just 0.7% in terms of industrial profits here. And last month we were talking about a 4% print here. So it looks like things have slowed down quite substantially here in May. We'll see if this is going to impact the stock market, but certainly it could be another hurdle for stocks here today, Dave.
Yeah, well, among the many things that are already in front of this market and preventing this from moving even higher. Let's get a sense of what the short term looks like and also the longer term as we go into a few more days before we wrap up the first half. Joining us here in set, Stephanie Leung, Chief Investment Officer at investment platform StashAway. Nice to see you.
Good to see you all.
Do I buy this dip today?
That's like kind of the multi-billion-dollar question. Yeah. I think we've just actually put out our second half outlook for markets, and I think what we're seeing is that on the good, I guess on the encouraging side, is that data continues to be quite supportive for a global recovery in terms of the manufacturing sector. Now, of course, we've just seen some disappointing data out of China, which I think going back a few months ago when we talk about the China recovery, we're saying that there are some green shoots. However, the recovery process could be kind of more gradual, just given that there's still a big overhang in terms of real estate sector. However, we can kind of look beyond China. We look at manufacturing sectors in the U.S., for example, or other markets. I mean, they seem to be rebounding from a slump that we experienced in the last 18 months. So that's kind of the good side of things. That's good news because ultimately the manufacturing sector is actually quite correlated with the global earnings cycles. Okay. So when you're seeing kind of earnings starting to get revised upwards, that's quite supportive for equities. And if we think about kind of the equity market rally that we've had so far, it's been very, very focused, right? All the AI stocks, like the Mac 7, actually most of the market actually didn't benefit from the rally. And with kind of profits turning around, we can sort of see this broadening of the bull market to the rest of the sectors. So that's
is that just in the U.S. that you're talking about, or
we think that mostly in the U.S., but also kind of the more cyclical geographies like Japan or even Europe that should start to benefit as well. On the not so good side is that the implication for kind of a manufacturing recovery means that inflation could actually stay higher for longer. And of course, that means that interest rates could also stay higher for longer because that basically limits how much the Fed could cut. So I think it's some good news, some kind of not so good news, but overall, we still remain quite constructive on markets.
Are you getting queries on still AI? So how do I look? So let's look at those separately, right? So broadening of the bull market.
Yes.
if that happens, good. What about AI? Micron had disappointing guidance overnight, because if that doesn't hold up, I'm not sure the index is going to hold up. Though.
Yes.
Yeah.
So I think we think about AI, it comes in phases, right? The first phase is, of course, where the earnings obviously goes. And where the earnings have gone is to hardware. And that's why NVIDIA now becomes like $3 trillion company. Everybody is ordering chips from NVIDIA because there's no other choice and there's a huge backlog. Now, what happens as the AI development kind of broadens out is that there is also a broadening out of which companies or which sectors would benefit. We're seeing a bit of that within even the Mac 7, right? The laggards like Google, Amazon, Apple, they've been catching up recently because, they've announced their own initiatives to actually incorporate AI into their own products. So I think what we're seeing in AI is a bit of a bubble, of course, in some of these names, like NVIDIA. When you see Jensen Huang being like a pop star on headlines, that reminds me of history kind of repeating itself in terms of everybody chasing the same names. But also, I think if you draw parallels to the internet revolution back in the 2000s, apart from, the dot-com bubble, we did see real improvements in terms of productivity, in terms of how companies actually drive profits using these technologies. So I think what we're going to see is a broadening out, first of all, of course, to other tech companies, but also to other sectors as well as they employ AI.
Okay, if that AI trade is still living on, I'm just wondering, can it withstand what I'm seeing now across FX and bond markets? Is the volatility that you're seeing, these yield gaps that we still see between the U.S. and the rest of the world here right now?
Yes. So I think part of that is because inflation is still a major problem that hasn't been fully resolved. And when we look at inflation or why inflation is so sticky, one of the key reasons that we've found is that the labor market is still very, very tight. And I think I've mentioned this before, like during COVID, about 2 million people kind of left the job force in developed markets and never came back because they had early retirement or because they became slashers, etc.
Yeah.
And that gap still exists, right? Which just explains why it's so hard to kind of cool down the labor market and get inflation down. I think the part that AI plays in this is that AI may actually help to close some of that gap because some of these workers can actually be replaced or filled by AI. So I think that in that sense, AI actually helps disinflation. But of course, that's not an overnight process, right? It takes time for people to actually start to use the technology to find it helpful. So I think that's going to play out in that sense.
And just to draw a line there between, what the takeaway would be in terms of currency exposure. So do we remain? Our preference is dollar assets, whether that's equities or in the rates market, for example?
Yeah, I think so. We have the PCE number coming out this Friday, and that could be quite important because I think if you think for the last 6 months, if you look at 2-year yields in the U.S., right, it's basically in a range. It has gone nowhere because inflation has actually been quite stagnant in terms of the progress towards that 2% that the Fed was targeting. Now, of course, we had one good number, CPI, that just recently came out, but that's just 1 month of data, so it's still too early to say. But I think given what we're seeing in the earnings recovery and the manufacturing recovery, that potentially means that inflation could still be quite some time before it reaches 2%. And in fact, if you think about the Fed's rhetoric, they have been hinting that perhaps they are seeing kind of long-term inflation being higher. Right? They've actually just, in the last meeting, for the first time in about 2-3 years, they have revised upwards their projection for long-term inflation.
Yeah.
I think that is actually quite important, and in terms of the signal that the Fed is trying to send out, which is that, okay, we may have to tolerate high inflation for quite some time.
Okay.
So if I'm looking at dollar yen at 160, is it going to stay north of that for some time if inflation is still something that is a risk?
Is this normal?
Yeah, well, if you think about the last cycle when the Japanese yen weakened significantly, that was Abenomics back in 2013. The yen actually weakened north of 60%. If you use the same projection today, that could imply the yen at 170. So I think, BOJ, of course, wants to talk it kind of like talk the yen back down. But I mean, given what we've seen so far, they have done some intervention. But I mean, it doesn't seem to be very, very effective so far.
Your advice on exposure to Japanese equity markets, given that?
Yeah, I think, still, the yen is quite supportive for a kind of strong Japanese market. Of course, we've seen some consolidation in the past 2 months. Significant reason for that is because of positioning and also the fact that China market has been recovering. So we all know that one of the biggest macro trade year to date is actually long Japan, short China. I mean, that is starting to reverse a little bit. So I think, this is now a good opportunity to add to Japanese exposure.
All right, Stephanie, thank you. Stephanie Leung, there, our Chief Investment Officer at StashAway. As we were talking about the yen, we're hearing a little bit more from Suzuki-san, from the Japanese officials here, and talking about the declines when it comes to the specific FX levels. Hopes FX will move in a stable manner. Doesn't want to see one-way moves in FX here, and currency should reflect economic fundamentals. So echoing a little bit what we heard from the currency chief Kanda earlier this morning, talking more, maybe a little bit more forcefully about those one-sided moves. We got plenty more ahead. This is Bloomberg. Welcome back to the China Show. A live look at Hong Kong here today. The clouds are sort of hovering here this morning, but hopefully that helps shield us from the heat a little bit. It's been pretty scorching hot these few days.
It's been horrible.
To say the least. Here's some other corporate stores are falling. We're sticking to the Hong Kong theme as well. The landmark mall is to get a $1 billion upgrade with the help of Hermes, Louis Vuitton, and other luxury brands. The plan includes new restaurants and multi-story stores for 10 tenants. It's a vote of confidence in the city's luxury retail sector, which is facing growing competition from destinations including Japan, Macau, and China's tax-free Hainan Island. New World Development is selling a 30% stake in its Shenzhen building to a Chow Tai Fook subsidiary for around $200 million. In exchange filing, the builder says it considers the building a non-core investment and expects to book a profit of about $14 million from the sale, improving its liquidity position. The European Union is said to be slightly revising its proposed tariffs on Chinese EVs after receiving more information from affected companies. Sources say the new provisional rates will come on top of the existing 10% duty, and companies that did not cooperate with the EU investigation will face an extra 37% levy. Provisional tariffs are set to be introduced on July 4th.
Yeah, now along those same lines, stay in the same story here. So the European Commission says it's investigating into EV subsidies shows that China's value chain benefiting at the expense of others. Now, that's a change increasingly heard not just in the EU, but you're also hearing that out of the U.S. as well. Danny Lee, our Asia Transport reporter, is with us here on set. A lot has been said about the industrial policy of China, and that as the major cause, if you will, of why EVs are so competitive. But that's only partly the issue, I understand.
Yeah, I mean, money subsidies are only part of this. What has been a sticking point between both the United States, Europe, against China. And what you have to really understand is the competition that has been developed over the years as a result of this dash to cash. Several hundred brands emerged domestically in China just to tap into this kind of free pot of money. And what we have seen is many fall by the wayside. You've seen quite a few big players emerge over time, and the success around trying to be on top, the innovation that's there as well, this cutthroat innovation to outdo one another has kind of captured the consumer's attention. This is why China, not just being the world's biggest auto market, it is also the biggest EV market out there and causing a lot of consternation with its efforts to try and go global. But on top of that, people have not really focused too much on the impact of Tesla coming into China in 2019 and capturing a lot of attention. The Chinese consumers really then taking a hold to the idea that EVs could be a thing that they could adopt and buy and drive because they were so capable. And that's what really has helped spur on since then the level of sales, which have gone up several-fold.
So do you think this playbook that China is undergoing, can that translate to other industries? And can Beijing's approach can other countries do it too?
This is a big question, and when you look at how much China has thrown at other industries, whether it be semiconductors, aircraft manufacturing, they're not quite there yet in terms of the success. Maybe not also in terms of how much and how early they've given so much backing to, say, like EVs. But there is some fruit that is signs that some of the efforts are bearing fruit ultimately in these kind of two other key industries that Beijing really wants to see be successful for them to be domestic homegrown players in. But when you look at the flip side of just how other countries are looking to combat Beijing, try to hold back Chinese EVs with these huge tariffs, as you said at the top, they're not going to be following the Beijing playbook here. They're going to leave it to market forces, but ultimately, these market forces, whether you're looking at someone like Volkswagen or Stellantis, they do have other market forces at hand here, such as shareholders, and you're not going to see the kinds of efforts being gone to try and allow these car brands to be loss leaders. They need to be profitable ultimately, and this is where shareholders have to say, well, hang on here, this is too much here.
Yeah, I mean, if you're a shareholder, you were happy 5 years ago. You're certainly not happy now. And I'm wondering, when the dust settles, who eventually will be the big winners? Is it the consumers? Is it global climate? Are we looking at a period of consolidation, for example? Where are we headed? What's the big picture here?
I think everyone here is a winner, whether it be the climate, consumer, but also I think the way in which we've seen the level of cooperation with Chinese EV brands, with Western brands, and obviously what we saw over the last couple of days, Volkswagen pumping $5 billion into the US EV brand Rivian. So we are seeing across the world, across borders, that people are doing more tie-ups more than ever, and because it seems hard for quite a few Western brands to go it alone. So you pick your winners and you trying to do it together.
Danny Lee, fantastic. Our Asia transport reporter there. You can catch that full story, of course, on your Bloomberg terminal. So some other big stories that we're tracking out of China today. So China has found that officials allowed cash raised from special bonds or funds from the central government to be invested in subpar or halted projects. The National Audit Office and the findings that include almost $3.9 million, that's US dollars, of bond funds that were either untapped or not used for approved purposes. This rare revelation highlights China's challenges in effectively implementing fiscal stimulus. Chinese Premier Li Chang is calling for more job policies targeting key groups like college graduates and migrant workers. According to CCTV, Li says strengthening the training of skilled personnel is crucial to resolving structural issues and also promoting full employment. Data earlier this month showed that the urban jobless rate at 5%. Meanwhile, you look at the youth jobless rate falling slightly in May, though still double digits at 14.2%. We'll leave you with a look at markets, 20 minutes of the cash market session, and the sell-off, particularly in Hong Kong, is gaining a bit of traction. Plenty more ahead. This is Bloomberg. Very big markets day today. Beers in you if you're a bear. We're looking at, what are we starting with? Let's start things off with a look at the 10s and, the continued melt-up we're seeing in yield. So we're up a further 1.5 on the US 10. It's really in Sydney where the bleed is perhaps most pronounced here from yesterday. So you had the hot inflation numbers, big move in yields there, big move today. It does seem August is live for a hike, 50-50 odds probability for now. September looks to be consensus or base case, looking at the probability of about 65 to 70% for a hike from the RBA come September, by September.
Yeah, in the midst of all this, you are seeing the CGB rally actually hold, right, a little bit.
Yeah.
Relatively speaking, you are seeing people seek some, shelter maybe in the CGB market. And it's interesting, right, when people are arguing whether these yields are too low or not. People are saying there is actually no alternative investment here right now, possibly in this bond universe. So 222 for your 10-year yield. We're hovering around those 2-decade lows here still, and 5 basis points higher for the JGB 10-year.
Close now.
That's quite a big move there as well.
Yeah, I think the level we're watching there, I'm just looking at our guidance here from our news desk, is the level just above the 1.1% handle in the Japanese 10-year yield. So above that level, we go all the way back to 2000. in 11. Really, which underscores the yen story even further, right? So the fact that we're not even there just yet maybe just underscores the fact that the yen should even be weaker than it already is.
I think traders have been talking about just, how to time this intervention from Japan, right? It looks like there's not as much angst around it this time around now that we reached 160 levels. I think Bank of America is saying 165 is that new line in the sand. But, some are saying it's crazy if they did anything before this Fed PCE print on Friday, just given the volatility around there. So maybe we have to wait a few more days.
You talked about this earlier. The language that's come out from officials today is firmer, but not yet, doesn't feel like there's a sense of urgency.
They didn't
there.
say it was excessive yet.
Yeah.
They said it was one-sided, it was rapid. So, they're bringing up the verbal intervention, but not quite as stronger as we would expect, given what we're seeing at the levels that we're seeing, right? So we saw Euro yen is basically at a record high. Aussie yen continues to see that as well. Renminbi yen is already at a record high.
Yeah.
So we're watching EMFX in particular here. At least for the renminbi, we're off the edge of 730 here, but we continue to see some weakness. But things have stabilized a bit, right? We're pretty much flat on some of these EM currencies right now.
Our guest this hour from Macquarie, of course, talked us through, if you had to pick across the Asian FX space, which ones perhaps would catch the strongest bid or remain supported, it's the chip-related export ones, like the won and the Taiwan dollar. ASEAN, I think the point there was, you're getting likely central banks coming in and intervening already in their own way to keep the currency stable, if not weaker. Speaking of that, we have a central bank decision today out of Manila. A look at Chinese markets. We're down 0.7% on the CSI 300.
Welcome back to the China Show. Here's a look at the Hang Seng here, just a half hour into the session. We continue to see around those session lows here, and the sell-off kind of extending a little bit further here in the offshore markets. We're 1.6% to the downside here, similar to what we're seeing across 8 shares. I believe the CSI 300 is doing a little bit better, but not by much here today, just given the volatility that we're seeing across FX and across bond markets today, Dave.
Yeah, just about every single stock is down in the Hang Seng Index, with the exception of 2, Tektronic and NetEase. Apart from that, it's just a sea of red out there, not just in Hong Kong, right? This is just really, I guess in many ways, a cross-section of what you're seeing in the region here. If you think this is bad, you look at what's been happening in Sydney, and over the course of 2 days, markets there are on track for the worst 2-day slump in over 2 months. We're down 1% today. We were down a further yesterday. Yields are melting higher substantially. The Aussie dollar is catching a bid. Market expectations around what the RBA does at the next 2 meetings has changed significantly from this time yesterday. August now seems like it's live, 50-50 probability of a hike. When you look at that all the way to September of this year, a hike now seems to be base case based on swaps, just to be more specific. Based on swaps, 65 to 70% probability of an RBA hike. That changes, of course, every day. Of note, adding to the woes across the region today, the guidance coming out of Micron, right? So if you hear anything good out of AI, it's good for us. If you hear anything bad out of AI, that also tends to weigh substantially. For markets that are just waiting to scratch that itch to take profits off the table, Micron is down substantially in the after-hours trade. The NASDAQ futures are down. Some of the chip plays in the region, around hardware, for example, are also coming under pressure in this part of the world today. Asia ex-China, I guess for all intents and purposes, there's really no big difference between China and Asia including China, because it's really one story today. Maybe with the exception of the euro. And just keep in mind, we're going into fairly big risk events over the weekend, elections, and of course the PCE numbers coming out of the U.S. Stronger dollar story still, I think.
Yeah, let's start with that, of course, really that stronger dollar story and really the impact it has here on Asia FX and like here. Let's bring in Bloomberg's macro strategist, Marcus Wong. He joins us out of Singapore here this morning. It's really all about the Fed in some ways here, Marcus, but when it comes to the yen, I mean, now that we've hit that 160 threshold, do markets actually see a high chance for intervention now?
I think that's a brilliant question, right? I think a lot of traders are on the edge, and I think markets are obviously jittery around the prospect of that. But I think the case to be made is not a strong case. In a sense, I mean, if you look at Kanda's comments yesterday, basically he said, the yen moves have been one-sided and they have been rapid, but I think he refrained from saying that they were excessive, and excessive is the key word here, because, if there was a tumble the yen, then I think that there will be a strong case for intervention from Japanese authorities, but because it's more been a grind lower, the market doesn't really feel that prospects of intervention are, in red alert at this point as of today. And it's also important to add that a lot of investors feel that, Japanese authorities tend to, intervene during periods of thin liquidity. So definitely, periods that at non-Asian hours would be a good point to start. In a sense, they'll get more bang for their buck because they have spent quite a bit on intervention. So they probably want to save their firepower dry. And I guess cases when it's not the non-Asian trading hours would be a better place for them to wager those intervention moves.
Marcus, I want to get your thoughts on something. One comment from a guest that we had on shows about an hour back. We keep talking about the Chinese currency and how it's been hitting its head on the weak end of the allowed of the band, and the risk, she says, that markets are not really pricing for is the PBOC widening the band. Now, they're not going to tell us, of course, if they're going to do that. It could come today, it could come in 50 years. What are your thoughts around some of these tail risks around excessive moves in these currencies?
Well, I think the PBOC has quite a variety of tools and for them, for different types of ammunition they can unleash. I guess you're right to say a tail risk would be widening the trading band, but it's fair to say I think the market, it doesn't seem to be a fairly consensus view. So I guess the question is, how do you price a tail risk in a sense? So I think in a sense, investors will probably want to hedge against downsides against the yuan in a sense, but I think widening the trading band, to be honest, is I think it's, as you say, it's a tail risk at this point in time, and it's not something that there's overt focus on.
Yeah, and it brings us to the question of the day. What matters most, right? This tumble in the yen to 160 or dollar China at 730 levels. What do you think matters the most to markets?
I think this is how you put it, right? I think for emerging Asian currencies, for that matter, I believe it's the weakness in the yuan that plays a bigger part. Well, essentially, Chinese, of course, a bigger trading partner for a lot of Asian economies. But of course, in terms of how the Japanese authorities intervene to stem yen weakness, I think that will have bigger reverberations to treasuries and global markets. So, to your question, I think how China evolves and how it manages the yuan from here, will play a big impact on how Asian currencies move. I think we saw the Bloomberg Asia Dollar Index fell to the lowest since November 22, and a lot of this is symptomatic of how the yuan has moved. But again, we look at the larger global markets against how the broad dollar will move moving forward. I think the yen and how Japanese authorities manage the yen will play a bigger part.
Marcus, we had the USPCE at the end of the week. And I'm wondering if there's a weak enough number you see there that manages to take the sting off this very strong U.S. dollar.
Well, I think you definitely need you're right. A weak number would definitely help, but we definitely need a string of consecutive weak numbers for the case to be made. I also highlight, another tail risk for that matter would be, of course, the the first round of U.S. presidential debate that happens on Friday morning Asian time. Of course, we are still quite a few months before that, but some analysts was already noting that generally this first round of presidential debates don't happen so early. So this first round of debates could actually spur further strength in the dollar, especially if there is a stronger case to be made that President Trump and of course Republicans control Congress for that matter.
Marcus Wong, our macro strategist in Singapore, for us, unpacking and dissecting, of course, what we need to know across these FX markets today. Just to pivot down to the other big story we're tracking here is these, the measures that are no longer in place, will no longer be in place in Beijing, becoming the last major city to ease home buying restrictions there in terms of down payments and mortgages and the tweaks around that. Let's get instant analysis now from our Bloomberg economist, David Thuy in Hong Kong, joining us out of Zoom in Hong Kong for us. So you have this, easing in policy, which was largely expected, if I could phrase it that way, because everyone else did it before Beijing. What next, though? Do we expect more stimulus to come out to support the housing sector now?
Yes, actually, I have to say that people have been expecting this for a long time. And in our view, it's just a problem of time that all the tier 1 major cities will remove the restrictions for home purchase. So that is a policy we can expect. In addition, we think that the home purchase program supported by the PBOC can be doubled the size so far. So far, the PBOC is providing 300 billion yuan to support 500 billion yuan's credit extended by the banks to help to support the home purchase by the SOEs. But we think the amount is still small, and we think it can rise to 1 trillion yuan to double the size.
I mean, it's been maybe a month, since May, that the government has issued this sort of broad package to rescue the housing sector. How do you think progress, is so far? Has it worked? Have we started to see a revival in housing demand?
Well, the market talks that in the second-hand market, it worked. But for new home sales, so far we think the effectiveness is not so significant. Actually, if you look at the 50 city, the new home sales in the 50 cities, you would find that June data so far are not so strong as what we saw in the second half of May. So it tells us that the potential home buyers are still hesitating because of the uncertain outlook in the housing sector.
So can things just get better from here, or can they get worse, David, as we look at the second half?
Well, what we think is that what is for sure is the government can give more stimulus. So on this aspect, we think that the total outlook can be a bit better. But the uncertainty is still that the confidence in the economy is still weak, and the potential home buyers are still hesitating because it was a long history that people saw the price of housing were rising on the way over the past 20 years. But now they saw the price are falling. So it's a quite challenge to their perception. So that we think the confidence restoration is not so easy to be achieved. So all in all speaking, we can say that, yes, we are expecting more stimulus by the government, but it's not so easy to reverse the weak confidence in the market.
David Chu there out of Bloomberg Economics for us. There's no single best chart or single better chart that reflects the stories we've talked about this last few minutes or so. There's expectations of rising rates in Japan, there's falling rate conversation in China, and this convergence that seems to be coming very slowly, but almost very surely, almost like gravity. I believe we're now within 20 basis points of the two 30-year yields nearing parity. We're extremely close right now. We're up at 2.4% on the Chinese 30-year yield effectively, and we're now trading at 2.3% on the Japanese 10-year yield. So this falling yield story in China effectively telling us that the economy the recovery is not happening to the liking of everyone, I guess.
The 10 years already converged, right?
Yeah, the 10 years already, well, the 10-year in China is already at a two-decade lows.
Yeah. Okay, still ahead on China's show, we're going to talk about those falling yields, really what it means, and really does it reflect this faltering recovery, and look at it really from the commodities angle with BofA Securities' Matty Zhao joining us there. This is Bloomberg. You're watching the China Show. Now to a Bloomberg scoop. The era of big paychecks for Chinese Well, investment bankers and financiers is fast coming to an end as big companies impose strict new limits to comply with President Xi Jinping's Common Prosperity campaign. Let's get to our Greater China senior executive editor, John Liu, joining us now from Beijing with that story. So certainly we're hearing this, from in terms of the bonuses, in terms of pay caps here right now. What more do we know at this point, John?
What we know is that the cap that's been put in place is about 2.9 million yuan. That's about $400,000 US on an annual basis before tax. We know that conglomerates including China Merchants, China Everbright Group, China CITIC, they've been telling some of their employees that they will not be making more than that cap, that any bonuses that they were owed over that amount will not be paid. And some of those employees are even being asked to return some of the pay that was in excess of that amount from previous years. So overall, not a happy situation for the people at those banks.
And John, I'm wondering what this might mean for either retaining or attracting talent, for one.
I think it'll make it very difficult. I think it is worth noting that all of these institutions are state-owned. These caps, these limits on pay, as we understand right now, apply to state-owned enterprises. There are state-owned financial institutions. So there are hedge funds, there are other foreign multinationals that are going to be out in the market looking to build their pipeline of talent. So it does spell difficulties ahead for these state-owned institutions. But at the same time, I think banker pay is always an issue, even all the more so when times are tough. And so it would not be a huge surprise if some of these more private, other institutions in the private sector come under pressure as well.
John, fantastic. John Liu there in Beijing for us, our Greater China senior executive editor with this Bloomberg Scoopy, which you can read all about, of course, on your terminals and also on the internets. Okay, plenty more ahead here on The China Show. Welcome back. Let's get you guys an update of some of the stories we're following. The European Union is said to be slightly revising its proposed tariffs on Chinese EVs. Good news. After receiving more information from affected companies. Now, sources say the new provisional rates will come on top of the existing 10% duty. Companies that did not cooperate with the investigation will face an extra 37% levy. Now, provisional tariffs are set to be introduced on July 4. The U.S., Japan, and South Korea have pledged to cooperate on building more resilient supply chains and developing key technologies. In a joint statement, their trade chiefs say that vital areas include semiconductors, critical materials, cybersecurity, and, of course, why not, AI. They are proposing to identify sort of loopholes, vulnerabilities in supply chains across the world and address weakness in strategic sectors. Now, big news out of Latin America. In case you missed it, Bolivian President Luis Arce has sworn in a new army commander after troops led by the general's predecessor stormed the presidential palace in an attempted coup. Now, hours earlier, the Bolivian troops crashed a tank into the palace in a bid to overturn the socialist government of Arce. His administration has struggled with an economic crisis amid dwindling natural gas exports and a shortage of dollars and a currency peg that has effectively collapsed.
Meanwhile, Indonesia's tourism minister is on a mission to get Chinese tourists to look beyond Bali for their next tropical gateway. Sandiaga Uno spoke to us at the World Economic Forum in Dalian and explained how the country plans to attract younger travelers looking for different experiences.
Before COVID, China was top 2 or top 3 of tourist arrival into Indonesia. This year, it fell outside the top 3, and we need to work hard to convince Chinese tourists to come visit wonderful Indonesia, and in particular that we're developing Beyond Bali experience for Chinese tourists to experience. And this is something that I aim to be able to achieve with this trip and with the sales missions of 1.3 million tourist arrival from China.
You feel the pressure from the region. Thailand has the visa waivers. There's all kinds of things that are happening there to get, and the Chinese, by most accounts, are going to Thailand. Where are you right now on the visa waiver front?
We're into the final stage. I think it will come just before Pak Jokowi and his term and our term in October, and I believe Pak Prabowo's strategy of continuity will actually also focus on tourism in terms of inviting more tourists to come from all over the world, in particular from China.
What are the biggest challenges, in addition to, of course, getting that visa waiver? I mean, have you seen the spending patterns here? The Chinese economy is slow, they're cautious, the consumer sentiment is pretty low.
We actually have tracked this through our big data analysis, and top of mind of Chinese tourists is still Bali, and they like to have the nature, culture, and adventure experience.
Now, you're the tourism minister, but also the creative economy minister. So I'm sure part of your remit is to get businesses, part of the creative economy, to come to Indonesia as well. Is that part of your discussions here?
Creative economy includes the digital economy, and we just finished the discussions on digital economy framework agreement within ASEAN. Indonesia is a top destination for investments for Chinese investors, but also globally as well. We are transforming our digital economy. We're the largest digital economy in ASEAN. I think $150 billion by next year will be recorded for the largest jump in the digital economy. We're seeing investments from NVIDIA and other AI-related theme coming to Indonesia, and this is also my mandate to not only create investments into the creative economy and digital economy space, but also push more exports into the creative economy products, digital economy products and services from Indonesia that is reaching about $25 billion this year and is going to increase by 10-15% next year.
Are there any negotiations or talks or whispers from Chinese companies and saying, hey, if we invest in Indonesia, we manufacture in Indonesia, we can kind of avoid sanctions on products that are re-exported potentially to the United States, or tariffs, I should say?
It would be a win-win-win situations for everybody to work closer together. We have a large EV ecosystem mandate that we're developing, and China-made EV products have made to Indonesia, but we want to increase more investments into the manufacturing side and to the downstreaming of the processing, the industrial processing goods coming out, raw materials in the batteries, also the services and the entire supply chain that we're developing, because Indonesia is the largest market in Southeast Asia, so we need to work together with the best of the best within the industry.
Sandiaga Uno there, the tourism minister of Indonesia, speaking with, of course, that was Stephen Engel, of course, in Dalian. Right, staying in Southeast Asia somewhat here, so we have a rate decision today out of the Bangko Sentral, that's in the Philippines, of course, and the expectations are fairly straightforward.
It's a hold.
Yeah.
But I think everyone's trying to time out what this rate cut cycle is looking like after what you heard from the governor himself saying, you know, they're indicating that they might be comfortable actually cutting before the Fed does, right? And I think August is sort of the time frame that everyone's thinking about. But they got to deal with this peso, right? I think we've been hovering around 59 record lows for some time now.
Very close to the record lows of 59, I think 0.2%. In fact, I wasn't the last meeting, I think I was off the last meeting, and I think, didn't you interview the governor?
It was very candid that they did intervene.
Oh, yeah.
Leading up to it, yes.
And I think it's the same question that we put to our previous guest out of Macquarie, and we were asking, given where the peso is, given where everything else is, who they thought was already intervening this week. Have a listen.
We certainly have the PBOC doing various,
various methods, of course.
Yeah, exactly. Doesn't seem to be selling dollar directly from FX reserve. Bank Indonesia, they intervene, throughout, but obviously they did a rate hike in April, and they potentially will need to look at rate hike again. In Malaysia, we have, central bank looking at other administrative measures in order to defend local currency.
Yeah, and I think she also talked about the Philippines as one potential, especially when you look at how things have actually not moved as much recently on dollar.
Inflation's also come down, right? We're back to the trading
within the ban.
Yeah, the ban.
Yeah, but
the inflation target ban.
That doesn't. Yeah, the cut potentially maybe not inflation focused, or might have a different implication on the currency, as you point out earlier.
Yeah. Okay, we'll see what Governor does here this time around. But taking a look when it comes to some movers here, so the developers, given the fact that we heard from Beijing becoming the last megacity to ease those housing rules and the like, so you are seeing Beijing-based sort of housing stocks. This was what you're doing. We're up about 6% for Beijing Dalong this morning. And we're still watching the Hong Kong retail space here, just given the fact that we saw Hong Kong Land talking about this big upgrade in the luxury sector as well. Also, Mingpao, this is the local media here, saying China is considering raising that duty-free shopping limit for visitors to Hong Kong. I think it's 5,000 to 30,000.
Yeah.
6 times more.
Time to go bling.
Yeah. Not much really reaction from some of these retail stocks, though. This is Bloomberg. All right, 11:29 a.m. in Tokyo. All eyes really on the Japanese yen here this morning. We're stabilizing, but we're still holding around that 160 level after we saw this tumble into the 1986 lows for this currency here this morning. So we did hear a little bit more pushback, verbal pushback from some of these Japanese officials here talking about how these moves look to be one-sided, but didn't go too far in talking about excessive moves. So maybe not really inching ever closer to that intervention. We'll see if we actually see that real intervention. We won't know anyways.
Yeah.
If they do it or not.
We'll have to wait till month end if they do something.
Yes, but they've rocked, overall, not just the bond market, but really also the equity market as well. We're down 1% on the Nikkei right now. Okay,
we're watching that closely, and who knows? Might happen today, might never happen. Asia is looking like this, so we're down in Japan. The banks, of course, as Yvonne is pointing out there, that's really a play on the rates. The rest of the region, though, and I think this, a day like today makes my job very, very easy. It's not good, as you can see. Also coming through earlier as far as economic data is concerned here, so ahead of I think we have PMI coming through out of China. Industrial profits numbers actually came out about an hour back. And the year to date, so from January to May, 3.4%, and we're coming off for the period last year was 4.3%. Industrial profits year on year for the month of May actually coming in effectively flat at 0.7%.
Yeah, I mean, you have maybe higher commodity prices that helped maybe some of these industrial profit numbers, but really it just goes, but it just goes to show how, you're not seeing much appetite for really investment or anything really among corporates or industrials here right now. It just goes to show that really more doubts in this recovery. And joining us now is Matty, Zhao, head of APAC Basic Materials, Oil and Gas Research of BofA Securities. I mean, the data hasn't looked too good of late. Exports-wise, though, still looking like it's still relatively strong in China. But how are you assessing this Chinese demand in the commodities sort of sector?
Yeah, sure, thanks. I would say year-to-date demand has been weaker than our expectations in most of the commodities. Like, for example, for copper demands, year-to-date is only up for about 2% versus our 4-5% expectation. And inventory has been reaching a few years high already in the China spaces on copper. On the other hand, like cement demand was down more than 10% year-to-date. Steel demand was down 5%. The only one that probably excess expectation is the aluminum demand was up high single digits. Yeah, but most of the demand was still relatively weak.
Tell us about copper, because it seems like it was a lot of these hedge funds that were willing to bring up this price to a record just a few weeks ago. I think we've shed some 13-14% now. The on-the-ground Chinese traders were quite skeptical.
Yes.
As well. Who's right? in this whole?
I would say probably in the first 4 months of this year, it's caused by more of a structural shortage on the supply side. And of course, the AI boom have been boosting the expectation of copper demand. However, if you're looking at the Chinese data since late April, inventory continue to go up, which should be the normal season where you see destocking. That's why causing a lot of the Chinese traders starting to concern. And this concern gradually also flow through to the Western world as well, given these China demand has been weaker than expectation, especially in the past 2 months.
And do you see any catalyst to reverse that drawdown in inventory moving forward?
We hope, because we think that one of the reasons that drive down the demand was because of the grid spending allocation, and they have been probably allocated to more of the ultra high voltage, the UHV, which use more aluminum. So in a way, aluminum demand beat expectation, while the overall grid spending has been in line with expectation. So it's basically just the allocation of funding into whether it's copper and aluminum. Of course, also the solar demand was much slower this year. Last year was a key driver for copper. Last year, solar was up 150%. This year, solar probably up less than 10. And also EV, obviously. EV has largely slowed down globally as well, which was pushing down the copper.
Yeah, I'm just wondering in terms of some of these property-related sort of commodities, steel,
cement,
the like. What have you been seeing? Because it seems like since this whole rescue package came out in May, we haven't seen enough to really revive a lot of housing demand out there. But are you seeing any sort of movement?
I would say the policy effect actually missed expectation. When it come out, we do have some expectation. And to be honest, cement demand, we were expecting 5 to 7% down only this year, but it's actually double-digit down year to date. And so far, we also haven't seen any sort of improvement so far on the ground on the cement side, which utilization rate now is below 50%, and earning is also like record low as well. While on the other hand, also for steel, similarly, demand missed expectation, mainly from the property sides. I think the property use of steel were down about 15% already.
Yeah, and I think we had a story today. I think the big announcement was Beijing, of course, coming out and loosening the restrictions. And we had the graphic that I think we're going to show it to reviewers. There's just a ton of inventory of apartments, right? So I guess, what are your expectations around housing starts and construction starts? Does that remain subdued until we go through all these inventory?
Yes, I think our view is it's probably will benefit those ones who were like the renovation-related materials first. So the destocking, probably you need to do renovation, say aluminum, right? That you need to change the window frame, etc. So those ones didn't slow down as much, while you will have to finish the destocking first, then we may come to the early cycle. Because in a lot of the cities, if you don't destock to a certain level, it also affect land sales as well, right? So if you don't have land sales, how do you have new starts and constructions? So we do think that steel and cement, you have to probably wait another year or two before we can see some rebounds.
Okay. Anything else that you have the most conviction on right now for the rest
I would say we are still positive in aluminum. We are still positive on gold. Our global team was even expecting gold to go to 2,700 on average next year as well when the rate cut starts, right? But for aluminum, like I said, because of the ultra high voltage the spending, and it's not a 6-month thing. Normally, the UHV spending will be about 2-year cycle. So we are still positive on the aluminum margins and some of the aluminum names as well. While on the short sides, we're bearish on steel, we're bearish on lithium. We are seeing, like, say, for example, the EV demand globally slowed down from 55% growth 2 years ago to now only 20%, while the lithium oversupply has enlarged to about 10% oversupply this year and probably 20% oversupply next year. So the lithium price, support prices just keep going lower and lower.
How much downside do you see in lithium prices from here?
So I think 90% of the downside has already been done, but the final 10% basically just means the company will turn from a profitable to a loss-making, especially given you still have a lot of the inventory risk, right? So lithium dropped from 500,000 to now 95,000. We think it probably can drop to 85,000 at the bottom.
Why still slightly bullish on gold? I'm just wondering, it seems like we're not sure when the Fed's going to start cutting. There was indication that maybe the PBOC may not be
buying.
buying gold anymore. Is that still that inflation hedge that is keeping this trade going?
It's the inflation hedge, and also this year we are having a major election year globally. So geopolitical tensions is something that matters for gold prices as well. Also, year to date, we have been seeing the ETF, the gold ETF, have been outflow, and our global team do believe there is a normalization of the inflow on the ETF given the strong gold prices. All this will be the driver for higher gold prices.
Matty, thank you. Matty Zhao there, head of APAC Basic Materials, Oil and Gas Research at BofA. Well, we were also talking to the London Metal Exchange, exploring setting up its first warehouse in Hong Kong for metals delivery as it seeks to strengthen services across Asia. The CEO, Matthew Chamberlain, is in the city for the LME's annual Asia seminar and told us China remains a crucial market.
The link to China has been crucial for the LME for many years now. And the acquisition of the LME by Hong Kong Exchange back in 2012, I think, was a really clear demonstration of that. So we look at every opportunity we have to bring our business closer to our very important stakeholders in China. Again, talking about copper, it's been absolutely crucial over the last couple of months that the Chinese copper industry has been able to deliver copper into our warehouse network in Asia, i.e. that we have warehouses that are easy and available to use for all of our Asian customers. So we take every opportunity to continue to grow that warehouse network, to make it as easy as possible for our Asian users and, of course, our users all around the world to participate physically.
Would that include Hong Kong, and what about the mainland?
Yeah, so we've talked in the past about our desire, if our Chinese partners would be willing to have warehouses in mainland China. Now, we absolutely understand that that's a decision that for China to take, and will be China's partner even when that works. But you're absolutely right. The locations such as Hong Kong providing that bridge into the mainland are very exciting. So we'll be saying a little bit more about that in our forthcoming seminar, so I don't want to spoil the surprise, but I think it's absolutely right to say that Hong Kong is very much at the center of our plans for that bridge into the mainland.
I did want to dig a little bit deeper into that, because is that sort of, a bit of a consolation prize, and is it worthwhile from a strategic perspective, given limited warehousing space in Hong Kong, given that it's not a major transit point at this stage?
Yeah, so I certainly believe that that our mission is to get as close as possible to the mainland as possible. So I wouldn't really use the term sort of consolation prize. I think we already have this incredibly effective warehousing network close to our mainland users. So to take the example of Korea or of Johor in Malaysia, or of course Kaohsiung, that we have these very convenient ports already where mainland users can easily ship metal to, as we've seen in the last couple of months, where significant quantities of Chinese copper have been delivered into our warehouses against that high price. So I don't think this is a binary question, warehouses in the mainland or not warehouses in the mainland. It's about creating as effective a network across the broader Asian region so that everyone in Asia, including in mainland China, has that easy access to LME warehousing.
Yeah, they're in town, the LME, of course, and that's the CEO, Matthew Chamberlain, speaking with, one was Sherry and one was Heidi, yeah, of course. Right, plenty more ahead. We'll look at what's been happening in the bond markets, melts up here, and these tightening spreads, maybe because of that's really leading to this almost massive issuance. So it's been good for DCM markets. More on that in a moment. This is Bloomberg. Welcome back. Right, you're watching the China show. If you've been trying to keep an eye on, stay up and watch the Euros, you might have also seen one logo come up time and time again. Alibaba, of course, in terms of advertising there. We're moving into the knockout stages, of course, this weekend in the Euros, and Bloomberg Intelligence now sees actually Alibaba scoring some goals of its own there because of the ad spend that they put in place. The Chinese e-commerce giant is a major sponsor, month-long, of course, this football festival. Let's bring in Catherine Lim, our senior analyst for BI. They've done a piece on this, and Baba's really been able to capitalize on their marketing spend here. Tell us more here.
Right, David. Well, I've been watching the matches, and really, I guess, the good news for Alibaba over the last 2 weekends of the, matches is that we've actually seen downloads of AliExpress, and that's exactly what you're seeing flashing across, the matches on the billboards, etc. Downloads have been actually up and actually exceeding the download gains of some of their peers like Shein, Temu, which is definitely a positive. And we actually hit a record high this year on June 17th. And I'm keeping my fingers crossed that we might actually see more positive signs of that as we go into the quarterfinals and the finals. So yes, we are seeing some positive impact of those initial spending that Alibaba has sunk into the UEFA Euro 2024.
It's great when you can fuse football with your coverage, right? I mean, yes, we're watching these downloads. Yeah. That certainly is one thing. How does it translate to earnings? Will these have a positive impact on the financials this quarter?
Right. This is definitely an exception, Yvonne, because, we've seen how Alibaba is, taking on very aggressive moves to actually make a comeback, not just in China, but then also overseas to tackle Temu, as well as Shein prepares for their IPO. And really, as we've actually just touched on it, they are spending and investing into the A&P. That's really going to widen the loss for the International Digital Commerce Unit, which is the overseas businesses, really, for Alibaba. And we will likely see that impacting the bottom line. But the good news is that, the very strong double-digit top-line growth, I do expect that to hold up this quarter based on what I've seen so far.
Okay, so we're moving from one major sporting event in Europe to another. I think the finals in the Euros is, I think, the 14th of July, if not mistaken. And then I think 2 weeks after that, barely, the Olympics in Paris are starting. Should we expect the same level of publicity, Alibaba splashed across the Paris Olympics?
Right. I guess, well, we're going to take a little bit of a breather, or rather, Alibaba's going to take a little bit of a breather because, based on what we've seen so far for the Olympics, they tend to actually, let cloud do their longer-term investments into some of the cloud technologies, and we will probably be seeing that come through. Now, that's for the longer term, so you're not going to really see that monetization impact coming through this quarter. So I guess, unfortunately, Olympics is not going to have as big a splash as UEFA Euro is currently on the company itself. But then that also means that, going forward, we're going to see whether, cloud is able to actually generate interest from more clients on the back of the technology insights that they gather from Paris Olympics.
All right, Catherine Lim there, our Bloomberg Intelligence senior analyst, just take a look at some of these big sporting events happening as well, impact on Alibaba, and it really kind of brings us to another sport here, which is the world of golf. This is the latest episode of Latitude with Haslinda Amin focuses on. Live Golf CEO Greg Norman speaks with Has about competing with the established PGA Tour and his strategy to reach newer and younger fans.
How do we reach down to the 18 to 35-year-old market? How do we bring these kids, these influencers, this new generation of people interested in the game of golf? There's 738 million people in the world who are interested in the game of golf. Don't play the game of golf, but interested. There's about 60 million golfers. So we have another 670-odd million people we can go figure out how to get them interested, not just in live, but in the game of golf. And so we sit down and you talk about this internally with your production team, you talk about with your marketing people. I truly believe we are on the road to doing that already, because when you look at our audience base today, that we have like about just around 50% of our ticket sales are 45 years and old and younger. following the PGA Tour, it's the oldest aging demographic in sport. It's 67 and a half. So in a matter of a year and a half, basically, we've pulled that 67 and a half down to 45 because of our product, because of the entertainment side. There are places around the world where 32% of our ticket sales are women. So they're coming to an event that they feel inclusive with. Right? So all of a sudden, we're seeing these data points coming out going, my gosh, we're owning this space.
Yep, you can catch the full episode, the premiere, Thursday, 8 p.m. if you're watching out of Hong Kong and Singapore on Bloomberg Television, as well, of course, on the Bloomberg Terminal and the website. Plenty more ahead. Oh, that's a nice belt from Haas. I just noticed it. Okay,
awesome.
Plenty more ahead. This is Bloomberg.
Here's a look at your China brief, a look at what's making headlines in national newspapers and trending on social media. Lots of reporting on the property sector here today in the financial press after Beijing rolled out new easing measures. Shanghai Securities News outlining the impact of these earlier policies. Now in Shanghai, new housing transactions reportedly rose more than 116% month on month from June 17th to the 23rd. And the report says authorities are now screening buyers based on a scoring system due to a spike in demand. Over in Shenzhen, China Securities Journal says that while real estate transactions have surged, not all properties are benefiting. It says luxury houses are seeing a jump in sales, but older and smaller ones are getting few buyers. And over at the Securities Times, they're calling Beijing's latest easing measures powerful, saying that they have boosted market confidence. The article cites industry insiders saying more policies to boost the sector may be introduced. So echoing what we saw, right, that story that we did on Shanghai and how the rich are still really buying a lot of these luxury real estate there in that city, and maybe top, tier one.
I mean, the rich will always be okay, right? Sorry, that's a bit deep. And that's really the way of the world, isn't it? It's also a hot topic on social media, these easing measures, just about across social media this morning. So Weibo users actually posting mixed responses or mixed reactions to these new policies. Some are calling, on rich people, to our point earlier on, to hurry up and buy. All policies are so favorable now with discounts. Other than price reductions, if you don't buy now, what are you waiting for? Others are asking, why not cancel all control measures nationwide? Is it good to squeeze the toothpaste bit by bit, referring, of course, to piecemeal policies being put in place? One user says that the core issue is that housing prices are still too high, not about reducing down payments or interest rates.
And some aren't too happy about easing purchasing rules for families with at least 2 children either. They said, what kind of families can have multiple children and buy 2 houses in Beijing? Another user saying, not only are you urged to buy a house, but also to have more children. This is how people of our generation are bullied as well.
I mean, raising children is costly.
When you have more children, you need a bigger house.
Yeah.
Yeah. That's just the reality.
Markets, though, no pivot here. Not good. So we're down about 0.7%. NASDAQ futures, watch this as you go into the U.S. session on Thursday. So Micron, obviously, I've talked that you'll be want to watch very, very closely on the back of the drop in the after-hours trade and the pre-markets, too. Europe's not looking too good going into the session there. And, of course, MSCI China at 1.5%. We're close now to entering correction territory. That's 10% from, I think, the top that we hit back in May 20, I believe.
Yep. So definitely still seeing their continued weakness when it comes to the equity space. We have a big interview coming up on Bloomberg Television as well. The U.S. Ambassador to China, Nicholas Burns, will be joining us live from our Shanghai studio. We'll be talking to him about tensions in the South China Sea, the Russian Defense Pact with North Korea, and, of course, trade and tariffs. That conversation is happening 2:15 p.m. Hong Kong time. You don't want to miss that one there, of course, on the back of the World Economic Forum and Dalian as well, as we count down to the plenum. That is it for us here at the China Show. Bloomberg Markets Asia is next.